So I do think that most of the indicators look very attractive, maybe not for a 6-month view, but for a 2-3 year view. I do think we're probably entering the next bullish cycle, from now into say 2025 or so.
In today's video, Lyn Alden, an investment strategist and macroeconomist, warns that once the debt ceiling is lifted, Janet Yellen will need to refill the Treasury General Account.
If you could share a little bit about kind of your insights and your views on what's going on in the economy today.
So I think we live in interesting times, which is not always a good thing. I've been comparing this 2020s period to the 1940s period, which is you have very high sovereign debt levels and big geopolitical challenges on what to do with them. And that's a recipe for potentially inflation. It's potentially a recipe for war. It's potentially a recipe for extreme events like capital controls, ways, trying to get inflation under control so much that you break banks. And so we have kind of a bunch of unprecedented events kind of playing out in a row. Things that should be normally spaced years apart that are almost happening in rapid succession. And I think because we're in one of those very large turning points, it's not just status quo the last 40 years. I think we actually have some pretty structural big changes happening. And so I think the key takeaway is that we've had 40 years of declining interest rates is very good for bonds, but by extension it's very good for equities. And I think as we enter maybe a sideways interest rate environment, or even an upwards interest rate environment more structurally, it's not really strong for equities. It's obviously not good for bonds. And the problem is that so many governments have their finances based around those asset prices always going up. And so as they stagnate, we get larger and larger deficits, which can be quite inflationary. I think the problem is that when you have this kind of instability can lead to more instability. So it creates a vicious cycle of more instability. So for example, inflation can lead to war, and then war is inflationary, right? And so you get a cycle plays out until it gets so bad that eventually there's a pivot. But it's like something that didn't have to be that bad can become far worse. And so I think the psychology is about that feedback loop that's not very constructive. I think that's probably the biggest risk. I think the second biggest thing is that this is an environment where we want to be extremely humble as an investor. Stanley Druckenmiller is probably the best investor living today. And he did an interview not that long ago, and he's like, I can make the case for deflation or 8% inflation again. And he basically, it shows the range of outcomes, especially in any given 2-year period, is larger than normal. And so we have to be prepared to see things that come against our expectations or that challenge our expectations. So I think this, you want to be very careful in this environment, very humble. And even if you have a view of what's going to play out, don't be sure you're going to be right. And then ask yourself, what would happen in your portfolio if you're wrong?
So what would you tell a brand new investor that's just starting out, especially in these times?
I think the key thing is be humble. I also think that a lot of new investors, a big mistake they make is committing too much to a position that they don't fully understand. So for example, I met a lot of commodity investors, and they're bullish on commodities. And I fully agree with the thesis. I'm bullish on commodities for this decade. Maybe not the next 6 months, but I think this decade will be good for commodities. The problem is they take that view, and for example, they buy all like small cap commodity miners as like half their portfolio, which is a very volatile, risky position. And then they face extreme volatility. They can be way early and have capital destruction. It's a very tough. Commodity mining is not a very good business model. And so if they overcommit to a thesis they didn't fully understand, it can really impair their future. So generally speaking, unless you're very deep into an industry that you actually deeply know what's going on, the default state is to be humble, be diversified, and maybe lean into the positions you're convicted about, but don't go all in on them.
So what sector would you kind of point them in the right direction of?
So I think that things that didn't perform very well in the last decade are more likely to be what does well this decade. So I think, for example, I think we overinvested, or at least we invested heavily in cloud software, software as a service, that kind of thing. We've underinvested in physical resources, including electrification resources, things like copper mines. We don't really see new copper mines coming online at scale. The ones that are coming online, the ore grades are decreasing, right? So I think there's a lot of infrastructure work to do. I think there's a lot of new oil, new copper production that has to be done. And I think that that'll be an area of interest for investors, let's say a 5 to 10 year period. I'm also bullish on Bitcoin. We're at a Bitcoin conference. I think that's something that people keep thinking they missed out. They see $50,000 Bitcoin at times and they think, like, I missed the boat on this. But I think it's important to remember that you can buy fractional Bitcoin. So Bitcoin is, it's really, instead of 21 million coined, it's actually 2.1 quadrillion as the smallest unit of Bitcoin. And the overall network, I think, is still very small relative to the total addressable market that it's going to be at in 10, 15, 20 years. And so while we can never be sure about the future, I still think that's actually probably an underallocated area, especially during bear markets. So there's periods of time where it gets overdone. But I think right now we're in an environment where I think people are probably underestimating what that can do in 5, 10 years.
So do you think we've hit the bottom in this bear cycle?
I think we have.
Okay.
One of the challenges in the last cycle is that you had a big bear market in late 2018, early 2019. It was a huge kind of structural bottom. And then you came off of it firmly. And then during March 2020, there was a liquidity crash. Almost every asset went straight down. And so Bitcoin briefly kind of retested those bottoms, but it wasn't really the true bottom in the sense that it only stayed there very briefly. The true bottom was really put in place over the long term during that 2018-2019 period. And I think that the bottom we saw from late 2022 to early 2023, I think it was a structural bottom for the cycle. And I don't have super high conviction that we might not retest it in some sort of flash crash, some sort of liquidity problem. I don't think we'd stay there very long if we did. So I do think that most of the indicators look very attractive. Maybe not for a 6-month view, but for a 2-3 year view. I do think we're probably entering the next bullish cycle, from now into, say, 2025 or so.
So that is a woman in the space. Like, what's the, because I'm fairly new to this world, and this financial space it's a little bit more masculine, I've noticed. Yeah. So as a woman in this space, like, what has that been like? I'm just curious. I know we're veering off, but I'm so curious to know.
I think it's funny because I came from the engineering world, which is also
okay. So you've kind of been playing in that.
Engineering is male dominated. Finance is mostly male dominated. Bitcoin is still kind of male dominated. I think the key thing is to, if you enjoy it, you can kind of get past all of that. And then two is build connections in the space. I mean, at Bitcoin here, they had the women's lunch, and I think it was 250 women in Bitcoin. So when the media thinks of Bitcoin, they think of, like, shadowy supercoders, and they're usually guys. And so there's actually, while it is a male-leaning conference, which is really true for anything computer science related in general, statistically, there's actually a really big component of women here. And you kind of see that same thing at a macro conference. I mean, I was at a macro conference last week, and there were actually 2 nuns that were there. Because they actually run the finances for their group. And they're responsible for it, and they came to learn. And so, it's when you actually go to the events and you see this, it actually can be kind of diverse. And I think you lean into that and you make connections with people that you resonate with.